All right. Says we're live. All right. Let's check you.
Mine says excellent connection. There I go. Go live.
Yeah, you probably have to hit the button. I'm connected directly. So
we are live. We are live.
Yeah. We're live and live.
All right. All right. Well, I think first things first, let's do a little introduction here. I think everybody knows who I am. Taylor, tell us who are you for people that don't know?
Oh, hang on. You got an ad coming up on your YouTube channel.
I got an ad.
Yes.
Not anymore. Now we're good. We're live.
Offer.buyalerts.com. Just for everybody to know, offer.buyalerts.com.
now you gave them more ads. They got to pay for that. Taylor, you can't say people on there.
That's Alexa listening in. They're going to send more ads to me for buy alerts. I love it. Yeah. Well, it's good to be here, man.
Do you give us for people that are maybe tuning in right now and haven't seen your stuff before or vice versa?
Yeah. Well, I'm Taylor. So I'm a trader and also a consistency coach in the Marketflow Trader community. So I work with Patrick and Patrick's community on helping traders become consistently profitable. So that's what I do. And it's a whole combination around, we work on edge, we work on taking the way Patrick trades and really kind of making that work for each individual. We work on process and we work on mindset. I've got training around mindset coaching, and kind of help people through some of those tough mindset challenges. So that's
one thing that I do really appreciate about Taylor is I remember when we first started talking about kind of like what the plan was with Marketflow Trader and, all that stuff. You were like, Patrick, I think my greatest goal here is to like really help people find consistency and find their footing in the market. And I was like, yeah, but we're going to make money too. And you're like, yeah, that's great. But like, I really want to, I want to help people. So I do commend Taylor on really, I think purely, Taylor, you do want to see people succeed.
Yeah. I mean, there's all kinds of things that drive us. I think everybody's driven by, something in their life. And I don't think like you can do this business and not be driven in some way. And I think coaching for me, like I'm driven in the trading business because I love it. Like I really, really, really love trading. And I'm driven in the coaching business because I also really like helping people. It's like, it's just kind of, I think my mom gave me some of that, and so I just kind of want to help people who are struggling because this is a hard business, So I don't do it necessarily for the money, but I'm not going to do it for free, right? Because our time is valuable, right? I mean, your time is valuable, my time is valuable. And, like wanting to help people is one thing, but, we also want to make sure that we're, providing value to people. So.
Well, I think there's nothing wrong with making a little bit of money and also helping people. People are like, I do the live stream every day free on YouTube. Obviously, I make money from YouTube. I make money from Top Step and, Marketflow Trader and all that. But I do see people, that message me like, Patrick, I passed the combine. Patrick, I made this much money. Patrick, for the first time ever, I've actually, found consistency because I watch your live stream. So I'm like, it's not bad, for a free live stream where obviously I benefit and everybody else I feel like they're benefiting. That's the win-win, right? At the end of the day.
How do you feel when you get those kinds of messages?
I'm like, damn, you made $5,000. I'm lost $3,000. That's what always blows my mind. I swear, I had a guy the other day. He's like, he sent me a screenshot. He made like 30 grand. I'm like, what did you do? I need to be watching you.
Oh my gosh, that's hilarious. No. I know you well enough. Like we've had enough discussions that, you're also doing this and you kind of built the community around the same principle, right? Like that's where we really aligned. It wasn't just me, it was you two. We agreed, we're like, look, this is something different. Like if we could build something different in the community that is about how do we help traders become consistent, that's truly unique out there. Because there's a lot of crap out there. There's a lot of garbage. There's a lot of bad information. Right. And so, and you and I have been not victims, but we've fallen into
I've been a victim, right? For sure.
Yeah.
I know if there's ever a class action lawsuit for all the bad advice that I got in my life, I want to be a part of that. So
what's the worst advice you got? What do you think?
I mean, just, what worse advice when it comes to trading is to trade penny stocks, trade small caps, like
Yeah.
to trade on FDA approval. Like, oh, if anyone ever tells you that, oh, this is a for sure, like this is for sure 1,000% gonna go up. It's like, yeah, no, that's definitely not gonna happen.
Yeah. Yeah.
And that's like when I first started trading, it was like I lived in this bubble, this idea that like, oh, like that's how you get rich in the market. You scour the internet for the next big FDA approval news, and that's you just get into it and then you hold it, and then when it goes down, you keep holding, you keep buying because it's gonna hit, right? Like it's gonna go up. And then you figure out that you're not a scientist and that most of these biotech companies are literally just gonna go to zero over time.
Yeah. Yeah. I think for me it was options.
Yeah.
I got convinced into like doing options, and like it was bewildering. And I mean, it was like I had this trade, like it was it was like this one company that had this parabolic move up. It was like this massive move up, and I'm like, dude, this thing's coming down. And I didn't know much about options, and so I asked, this guy that I knew who's like, okay, you put this thing that's like a jade lizard or something like that. I'm like, all right, so I did that. It did exactly what I expected, and I lost money. So I'm like, I don't understand how I lost money.
I mean, the options market is the best because like I've had times where I had call options, or I remember one time I bought puts on some company, and I bought like $20 puts, and the stock went to like 70. And then like 3 days later, the stock was like trading at like $8, and I still lost money.
Gosh.
Like it literally, I remember seeing it. It was like to break even, it had to go to like $2.
Oh my word!
And I'm just like, yep, that doesn't work. It just, you think it works, but it don't work.
It's
and that's what I love about options. That's kind of why I got into futures in the first place, because I was like, the whole options market, trying to figure out the strikes and the do this and the theta and the IV. It's so misleading because you're like, well, this stock is, I'm going to buy $20 puts, like it's going to go back below 20. Then it goes back below 20. Then you're like, wait, it has to go below 2 for me to even make a break even on this.
Yeah. I don't know about you, but I know a lot of former options traders.
I mean, I think it's funny because so many people trade options on the SPY and the QQQ. So it's like, why would you not just trade futures?
Yeah. Yeah. Trade the ES.
Especially if you're doing intraday. Like if you're like trading options like at open, like why would you not just trade futures?
Yeah. Yeah. Just tons of advantages.
It's terrible. No, I mean, it's like, I don't even know why anyone would. I just ask, like, I see people like, yeah, I bought a bunch of call options at open. I'm like, why? Yeah. Why did you? I guess, you know what it is? It's the leverage, right? Like they think they're going to buy like far out of the money call options, and the market's going to rally up 3%, and they're going to get rich off of the 5-cent, call options that they bought.
Yeah. Yeah.
And sometimes it works, but I would say the majority of the time it don't work. So
yeah. Yeah. And then there's the selling the options where you.
Oh yeah. No, that's my favorite.
That's like
you can't lose selling options. Oh, trust me, you could lose.
Yes.
Yeah. It's pretty, I think it's just funny because no matter what with trading, there's always somebody who's got some theory. I'm like, this is exactly how you sell iron condors, butterflies, you do this. I'm like,
Yeah. So we've all gotten really bad advice. What do you think is like the best trading advice you've gotten?
Best trading advice: buy low, sell high. Like the number one. That one works all the time. I'm serious. No matter what your strategy is, as long as you're buying buying low and selling high, you're doing good. Yeah. I think honestly, the greatest piece of advice that I got from people is like you're not going to get rich overnight. Like it's just, I've had plenty of $20,000 days, $30,000 days, and to be honest, like, nothing changed for me. It wasn't like a light bulb went off and then the very next day I was a millionaire. It's never that simple. So yeah, I think that would be the greatest piece of advice. And I'm sure you've been through it. I mean, you've been trading for how long now?
On and off 15 years.
Yeah. I mean, I've never met anyone that's just like, oh yeah, dude, I just started trading last month and I just made $1 million. It's always like, people get lucky. I think in the beginning they get a little cocky, little lucky, make a little bit of money, and it's like, oh, I made a couple $1,000s my first month. It's like, okay,
yeah.
Talk to me in 6 months. Talk to me in a year. Talk to me in 10 months.
Yeah, yeah. No, totally true. Totally true. It's interesting because like it takes time, but it's also like people think it's really easy too. and it's simple. It's when you look at it and you kind of break it
Oh,
apart, it's simple, but it's not easy. And it's the hardest thing to express to people like, hey, trading actually is simple. Like the whole mechanics are pretty simple, but to actually do it and do it consistently and successful, man, it's a really hard thing to do.
well,
It
that
really
was perfect example. Today I'm on Top Step TV. I'm talking about like, all right, I want to see the Nasdaq push back up to the VWAP for a short opportunity. The Nasdaq pushes back to the VWAP, and you're like, okay, it's gonna do something, and then you're like, and then all of a sudden it starts pulling, and then it starts dropping, and you're like, before you know it, it's 30 points lower than the VWAP, and you're like, well, I missed that one. But in
yeah.
hindsight, you're like, well, that was genius.
I was expecting that.
Yeah. It's so easy. All I had to do was get short when it got to the VWAP. And you're
Yeah,
like,
was waiting for it to happen.
yeah. So it is very interesting. I think one thing that I've really been focused on lately for me is just really waiting for those little pullbacks. You know, if I'm like, okay, I want to buy a breakout, like I'm totally fine with like letting the breakout happen and then being like, all right, I want to get a little bit of a pullback. I want to kind of like look for a trap almost, you know, something to kind of be like, all right, now I think
Yeah.
like it's going to go higher, because now it's kind of like it pulled back, it kind of stopped out the people that chased it. Because like if I look at like my, you know, my when I end up losing money, I would say 99% of the time it's because I FOMO'd, I jumped in too early, and then I get stopped out, and then it bounces. Like the other day, I literally got stopped out at the bottom of the fucking, like, it couldn't have gone any more perfect. Like I put my stop, it hit the stop, and then like back up 30 points, and I'm like, wow, sick. Okay, awesome. Like thank you for that. So that's like basically just trying to like, I want to avoid that you know, getting stopped out at the bottom and then it going higher. So now it's like I'm gonna wait for that stop out at the bottom and then be like, okay, now we're getting in, you know. Now basically thinking like, okay, where would I normally enter? Where's my stop normally? Okay, let me wait for this to basically play out, and then I'm gonna jump in once I get that like kind of trap move happen.
Yeah. Well, and you're still really good at that, right? Like one of the things I've noticed about your trading generally is even though it happens to you, right? And you kind of have to expect it to happen because this is kind of how the market works, right? Net on net, you're still really good at timing your entries. Timing is so important. It's something that we don't talk a lot about in trading. We talk a lot about levels, right? And like, hey, you know, the level, you got to have the right level. We talk about having the right bias, like making sure we're on the right side of the trend. But timing, like that makes or breaks traders so often. Like there's so many people, and a lot of you who are listening are probably like this. Like you're like, hey, I know where the market's going. I know the market's going back up. But when time is a really, really difficult thing to kind of grasp and really nail in the markets when the markets are so, especially jumpy, you know,
Well,
when
I
these
think that's that you work with a lot of different traders and with coaching and stuff in the Marketflow Trader community. What would be like, all right, let's say for me, all right, Taylor, I'm like, you know, I always get in early.
yeah.
And then the market pulls back, stops me out, and then I'm like, I'm done. I can't trade anymore. Now what do you tell me? You know, like what's the secret piece of advice? Tell me the secret, Taylor. Because I know there's a lot of people watching this right now that have probably gone through the same exact, you know, they're going through the same thing. Like what would be the piece of advice there?
Yeah. Like if we were actually doing coaching, like
Yeah. Me and
we
you, we're just doing coaching
probably,
right now.
well, you want to do an actual coaching session?
Yeah, no,
Let me,
I like it. A little coaching session. I'm
all right.
getting in early. The market's then pulling back and then
All right,
going
when was the
higher
last time
without
this
me.
happened? When was the last time it happened?
This morning, actually. Yeah, no,
Okay.
this like exactly this morning it happened. I kind of like jumped in a little too quick. It pulls back, stops me out, and then rips right back up.
Why do you think you got in early?
FOMO. I just like it started just looking, you know, it was like you had those little wicks. It was like, all right, it's gonna go. Like it's gonna go right here. Like here it goes. And then I'm like, I jump in, and then all of a sudden it's like, wait, down to like the 14 EMA, and then it bounces.
So would you consider this a process trade for you, or was this an anticipatory trade?
It would be, yeah, no, I was like anticipating it for sure. I was like, okay, it's going to go. Like, I'm basically like, I just made that decision that it's going to go through a level
Yeah.
without like really, you know, ticking all the boxes.
Yeah. So without going deep into a coaching call, right? Like you can break this apart with edge, process, mindset. Okay. So on the edge side, and really we can combine edge and process here. You said that you did not follow your process, right?
Yeah.
That's the bottom line. Like, you did not follow your process. Then we talk about the mindset piece.
Yeah.
And the question is, well, why? Why didn't you follow the mindset? Because you decided that the market was going to do something. Instead of thinking, what's my process trade here that I need to follow and take, you thought, oh, the market's going to go. I need to get in right now. So you were more focused on what in that moment? Profit?
And you know what's funny? You know what's really funny? I think about it too now is like, you know what my thought process was on that trade? I was like, I'll just take like a quick scalp.
Oh yeah. Okay.
Right? It was like one of those, like,
Easy
it's
money.
gonna pop. I'll take a quick 5 points, 15 contracts, no problem.
Easy money.
You know, like, it's gonna go. I'll just take a quick scalp. I think anytime that my thought process is I'm gonna take a quick scalp, that's almost always gonna either, like, I'm gonna get that quick scalp, or like it's 50-50, right? Like, it's 100% 50-50. But and the more that I weigh, the risk reward, it's like, but what's the reward there, right? Like, if my thought process is I'm gonna take 3 points for a little breakout, like, is that really worth it when my downside is 10 to 20 points? Like, that's nowhere near worth it.
Yeah.
Right? So, like, waiting for that pullback into the EMA, waiting for that level that would be like a bounce level for a pushback up, like, that's really now we pulled back, and now my risk is only basically, 5 points for a possible 20, 30 point through the high. And the best part about, like, getting that little pullback as well is, for me, is if we get that little pullback and I get my perfect entry, now my upside potential is way better, because not only are we if we're going to go higher, we're going to break through that previous high, right? We're going to break through that little high that we were just at, a little breakout level, the resistance, and then we're going to probably go 10, 20 points.
Yeah.
So not only am I going to get a better entry in terms of risk reward, but I'm going to get a way better profit target, because now I'm also like way more confident in the trade, because now I'm like, hey, look, here we go. It's about to break out. Perfect. Like, I got a really good entry. Even if we don't break out through that level, like, worst kind of worst, I get out for break even, or I get out for a small profit. Whereas if I'm trying to, like, just jump in to get a quick scalp and it totally reverses, now I'm like, shit, there is no chance. Like, all I want to do is get to break even. I just want to, like, if I get back to break even,
I know,
I'm getting
right?
out,
You're like, just get me out of here, please.
Yeah, like that. That emotion is crazy.
One of my mentors always, he would repeat this over and over again, and I've adopted this mantra over and over again, which is, my process is a better trader than I am. My process is a better trader than I am. And so when we're talking about these kinds of issues, in my program, with the guys I'm coaching, we talk incessantly about focusing on process. Like, when you start focusing on profit, everything goes awry. You have to, every single trade and every single day, you have to be focused on process. You have to repeat in your mind over and over again, is this a process trade? Is this a process trade? If this is not a process trade, I should not be touching it at all, because my process is a better trader than I am. If you can get, like, if anybody can get there, just to where, like, your edge works. And Patrick, we know your edge works, right? Your edge has positive profit factor. It's consistent. You've developed a process that allows you to execute that edge. That works. And so anytime you deviate from that, it's never going to be great, right?
Well, I would also say that if I look at the trades that I lose money on, like, I don't know, probably, 75, 80% of the time, I mean, there are trades that they're not even anywhere near what my strategy is. I'm just like, like, why did I take that trade? Like, what was that? Like, what were you doing? Like, you were maybe trying to buy a dip when the market's going strict, when the trend is down, you're fighting the trend. Like, I think that if I had to give one piece of advice to anyone out there, I mean, even best piece of advice I ever got is, like, don't fight the trend. I mean, the trend is just, like, it's such a powerful thing. And it's so, I don't want to say it's obvious, but, like, it's kind of obvious. If we're putting in lower highs, we're moving lower. Like, okay, there's no reason to try to buy the dip. Like, just let the trend tell you which way to go. I mean, that's the best thing too, is, like, sure, you can buy those extremes, right? Like, let's say we're going higher and you keep trying to short the top and you get those little pullbacks. Like, you could totally do that, but, like, it's so much easier and so much safer to be going with the trend, going with the flow. Because, I even talked to, like, Michael Patak today, the CEO of Top Step, and I asked him, I was like, because he kept trying to short the top this morning, and I was like, why are you trying to short? And he's just like, Well, I think the tilt, the tilt, and he's talking about the, more people want to buy than sell at the top, and I was kind of just like, but if you would have bought the dips, you would have gotten, instead of 5 points on a short, you could have gotten 20, 30 points on the push through the highs.
Yeah.
And vice versa. So I think it's easy to like try to always fight the extremes, right? Like yesterday with FOMC, the interest rate came out and everybody was like, I know for sure that a lot of people blew up yesterday because like I can see the, commissions from Top Step, and it was probably one of the biggest days I've had in a long time in terms of commissions. Yeah, no, I mean, there was a lot of people blew up combines just because I know what they were doing. They were trying to short that pop because it went straight up. And it's one of those things, a lot of times when big news comes out, we get that fake out, right? We get that like pop or we get the drop and then it goes the opposite direction. And yesterday, it was one of those times, 9 out of 10 times, it's going to get that fake out. Yesterday, it was that one time where there was no fake out. There was no fake out at all. It just kept going straight up.
Yeah.
And people in their minds are like, oh, it's going to pull back. It's the fake out. It's the fake out. Yeah. But it went up 200 points. So it's like, that one time, the 1 out of 10 times,
that'll burn you.
It'll get you. So it's like, it's pretty obvious. When people are blowing up too, because you can just see the market, the way it's moving. Like this morning, I know people were blowing up, especially that move in the middle of the day when it just dropped 100 points straight down, because people are just like, they're trying to buy that dip, when it's crashing down, and it's just like, I don't know. With futures, you cannot try to buy the dip on a falling knife or try to short the top, because the futures can just, that 20-point move up or down from where you entered, you're getting stopped out and you're blown up for the day.
Yeah. I think there's some really good fade traders out there in the world. But if you don't have a process for fading that is proven, a proven edge, you've got very specific things you look at, you have a very specific approach, right? Like just fading on a whim is never good, right? So we're kind of back to this whole process thing. I think fading is fine, honestly, if you have an edge behind it. If you have a set of rules and those set of rules pan out over 100 trades, that if I look for these particular things when I fade, then this is going to work out. But to your point, I think most traders are way better following the trend, especially
and it's like
if you're a developing trader, you shouldn't be fading.
There's a difference between being like having a strategy to like fading.
Right.
Like there's a difference. Like if you have some type of if you can you're reading price action, you can see that we're getting really far, off the moving averages, whatever it is. Like there's a difference in knowing that. But it's also I think trying to fade news is really difficult as well, because news is not going to follow. We can get 5 candles straight up with no pullback at all. So it's like if you're a fading trader, now you're done.
Yeah.
On a day where we're getting good price action, you can fade, the highs and the lows, because you can see okay, we're getting far away from the moving averages. It makes sense.
Yeah.
We're fine. We're getting overextended. I think that's totally fine. But I think for most people, if you don't have a strategy that you can actually explain what your strategy is for either shorting the top or buying the bottom, it doesn't work. And that's not a strategy. Just because the market, it can't go lower. That's my favorite. It can't go lower. Well, today it dropped in a matter of 45 minutes from 819 down to 634. So at any point, if you try to buy the dip, there was no bounce. You would have just, unless you bought the exact bottom, but you probably didn't. So, and the best part was, there was a pivot point there that we blew right through. There was support. There was a lot of things that it should have bounced, but it just dropped like a rock. 150 points.
Yeah.
And then ripped right back up, because people probably shorted the bottom too and got their faces ripped off, because then it went from 630 back to 680. In a matter of minutes. So it's oh my God.
Yes.
The extremes. I just don't know about trying to trade the extremes. I think you're better off just playing with the trend, and if anything.
I think that's great advice. I think, especially as a developing trader, learn how to identify the trend, learn how to identify when you're in chop. So you shouldn't be trading in chop, right? The idea of trading in the trend implies that you shouldn't be trading when it's choppy and rotational in that kind of environment. I think that's probably one of the hardest skills that, the traders, as I've worked with traders, That's been one of the hardest technical kind of edge oriented skills is learning to recognize when they're in chop and when they're moving out of chop into a trending environment, right? Because that transition between kind of chop and rotation to a trend, that's a pretty lucrative transition. It's just really hard to time and really hard to get. It'll eat you up.
Yeah, no, and that, trust me, and I'm 7 years, right? 7 years of being a student of the market. Somebody asked me today, at what point did you master this? And I'm like, master? I'm still learning. I don't think you ever master it. I mean, I was talking to Hogue today. He's been trading for, I don't know, 30, 40 years. He traded in the pits, and it's still like every day. It's like I think the market is very good at humbling you, right? Like you have those, like I've had plenty of times where I have like a 5 or 6 win streak, making money every day for 6 days. And I'm like, guys, it's time to go and put a down payment on a yacht. I can't lose. 6 days of greed. And then it's like followed by 6 days of red. And you're like, damn it. It's so easy to get humbled. But that's the great thing about like having a process, having an edge and all that is, I can have 6 days of green and then still have 6 days of red because my 6 days of red are only $3,000 where my 6 days of green are, triple that. So that's the whole point.
And not everybody's going to trade their process 100%. Like it's like you have enough cushion in your edge. Like your edge is so good that it affords you the occasional mistake. Like today, taking a trade on feel versus process, right? Your system and your approach allows you to absorb those kinds of mistakes as you go to get better and better at, right? And so that's part of the game too. It's just getting better at what you do. And then also like, I know that, we're celebrating a year of Marketflow Trader, which is awesome. But you trade differently now than you did a year ago, right? Because you like a little bit, right?
Yeah, I agree with you.
Not totally different, but like I'm saying, like you've evolved and you're constantly evolving. We're always constantly evolving as traders because we're learning and we're kind of like, we're bringing in these new skills that we're learning, kind of making things better, right?
Well, that's the whole point, right? At the end of the day, every single day should be a lesson. Like you either like you follow your plan and you learn that your plan should be what you follow. Because like there's nothing better than executing a trade, putting your target, putting your stop, and then just sitting there and watching it happen, right? And being like, okay, like having no emotion. And just like that's like the pinnacle of being a good trader. Being able to just put a trade on and be like, okay, I am totally at ease or at peace with whatever outcome happens because this is my trade. This is my setup. There's no way I can't take this trade.
Yeah.
And that's where that's where I want to always be at. Obviously, like it's difficult. I think the hard, one of the hardest parts is obviously like I'm live on YouTube and stuff. So it's like I definitely start to get stubborn. Especially when people in the chat, they're like, Patrick, this is not going to go higher. This is going to go lower. And, people start saying they're saying that I'm wrong. And it's like, now I'm just stubborn. And I'm like, oh, it's going to go higher. It's going to break the highs.
I'm going to make it go higher.
Yeah. Like I'm going to call the NASDAQ and I'm going to make it go higher. So it definitely, it is difficult sometimes. But like I did some trading off stream today and had some really good trades, put on 3 contracts and just like, got in and just put my target and it was so crazy because like I didn't even really like I was working on other stuff and I just really didn't even care about it.
I love it.
Because I'm just like, that's it's gonna hit. It wasn't that I knew it was gonna hit, but I was like, if it's gonna hit in terms of like I just know that I'm like, this is my setup. Like it's going, I'm with the trend, everything is right, totally fine. And then like I think one of the trades I had like 0 drawdown. It was like I was in. It went do, took me out, and I was like, oh, that's nice,
That's amazing.
And that's the best part about futures. It's like, it's so scalable too, right? Like you could trade micros, you could trade 1 contract, you trade 2 contract, you can really scale it, and you can learn, and you can really build yourself up. Where if you're trading options, you're trading small caps, whatever it is, like, it's really hard to learn while you're doing it. But with futures, it's so great, because trading the micros, trading the prop firm, trading like a combine with Top Step, whatever it is, like there's so many ways to learn with very small capital at risk.
Yeah. Yeah.
And that's why I really like, we push, Marketflow Trader. We really push the futures side. The great thing is like you can trade any other. You could trade crypto. You can trade the stock market. You could trade whatever individual stocks. You could trade all those stuff with what we're teaching with futures. But I think from a beginner standpoint, there is no better way to learn how to trade than with futures. I mean,
totally agree.
you've went through every possible market. Like, yeah.
I did stacks once.
You're trading what, crude and kind of ES right now, or is that
crude ES and NQ, and then
yeah,
pretty much. I keep an eye on gold, but gold is so erratic for my system, my trading system. But yeah, those are the big three for me.
So with your trading system, is it pretty much like cut and dry for each market, or do you kind of fine tune it for crude versus NASDAQ?
Pretty mechanical. It's like pretty much the same rules for each one. Yeah, I mean, it's like. Yeah. And that's why like gold is hard because, there's like weeks where gold is the most beautiful thing in the world. And then there's weeks it's like, what in the world is this thing doing? So it's so erratic that I'm like, I need consistency. I need that steady equity curve growth. Right. So it's, for me, CL, NQ and ES are the prime. Yeah.
I agree. Eric Smith had a good question about the 15-minute breakouts, set up the strategy, how to make it a little bit more consistent. I think it's really comes down to being able to identify, like, if we do break to the downside of that 15-minute range, is there a reason for us to bounce? Like, are we going to break it and then bounce off a key level and vice versa? Like, obviously, we're looking at that 15-minute range break, but we really want to look at the bigger picture. I might look to like, if we break out of this 15-minute range, are we going to push into a pivot point? Is there a previous area that we might bounce off of? So that'll obviously really help you with the overall consistency. Today was a perfect example of the 15-minute range. I mean, we pushed back up to 1245. We hit that 15-minute range, and we dropped from 811 down to 630 on the 15-minute opening range. I mean, that's crazy to me to think about. Like, that was at 12:50, almost 1 o'clock in the afternoon, and that 15-minute opening range was still money. Somebody asked me that earlier. They're like, how long is it valid? I'm like, it's valid all day. Mm-hmm. That first 15-minute candle sets the tone kind of for the market, that day. Like, are we going to chop? Are we going to be stuck in that range for a while? If we break out of that range, well, look, we broke out of that range after 10 o'clock. We broke out of the 15-minute range, and we were pretty much below that range for the rest of the day. So it's like, pretty evident to see that, the strategies and what we use and what we talk about in the Marketflow Trader community really, I mean, these are all strategies that can be applied no matter really what time it is, throughout the day.
I know with the 15-minute, just working with a lot of the guys in the community is that's been a real good boon for them. Once they really learned what that, what that does for them, which is kind of help them stay on the right side of market direction, right? Because like the 15 minutes sometimes is pretty clear. I think one of the traders I was working with just the other day was like, yeah, if I had looked, like I didn't look at the 15-minute, but if I would have not taken this trade because I realized it was like I was going the opposite of where 15-minute was.
Yeah.
So definitely getting that, like I think that's kind of this aspect of the timing part, right? And kind of staying on the right side of trend. Like we have to learn not just the micro aspects of the trading edge, but also a little bit more about macro stuff. Context matters. Context is king in a lot of cases. So I think the 15 minutes is great. That's awesome. I'm glad someone asked that question.
And I would say, obviously I do have those days. Like we talked about this before, actually. It's funny. We talked about something the last time I did a Q&A, I try to tell myself, I'm like, maybe I shouldn't trade that first 15 minutes. But then I'm like, I make a lot of money in the first 15 minutes. So it's like,
yeah,
it's an up and down. But I think for most people, especially for new traders, there's nothing wrong with waiting for that first 15 minutes. Especially if we have like 9:45 news, we got 10 a.m. news, like just wait for that 10 a.m. news to hit. And then we're either going to get a better move or we're going to actually break a range, whatever we're in. So I think nothing wrong with waiting for that first 15 minutes. I
like it. Someone was asked if you are there any trading podcasts you listen to? Do you listen to any trading podcasts?
I might be the worst like day trading YouTuber because I really it sounds, I guess, conceited, or maybe I just like I live and breathe this stuff, and I really I don't want to I do this every day for 2 or 3 hours a day on YouTube, and I don't really I don't want to spend time listening to it outside of it, like I go fishing, I want to live my life. Like day trading is not like my life, it's like
Yeah.
it's my job. Like I want to keep it that way. Like I don't want to be, and I think also too the problem is like I really don't want to get other influences, right? Like I really kind of want to keep like what I'm doing, and like just because I feel like then if you start to like, because when I first started trading, I would try to like listen to every single person's different ideas and strategies. And, to be honest, like everybody has their own little thing because that's what works for them. We've talked about this before. Like at the end of the day, a person can come to the Marketflow Trader community and they can learn everything that Taylor, everything that I know, everything that Sage knows. But if it doesn't fit their personality, like if it doesn't fit who they are, like it's not going to work. So you really got to like kind of find your thing. You've got to find your own style. Like you got to put your own little spin on everything. And I think that's what's so important. And that's the cool thing about trading is I've met people that do the weirdest things and they make money. And I'm like, that makes no sense, but you make money. That's cool. Awesome.
Yeah.
So that's kind of, I don't really read books about trading. I don't watch podcasts. I try to just stay out of it.
Good. All right. I'm kind of like that too. I spend most of my time, my free time if I'm doing trading stuff, it's usually in the charts backtesting. I'm usually backtesting. I'm usually, going back through, I'm doing my trade reviews for the day or the week, just updating my stats, that kind of stuff. So but I think it depends on where you're at in your development. Like if you're still kind of developing and learning as a trader, there's a lot of great resources that are out there. There's some great podcasts. There's some great, books or some great other stuff. So
yeah, no, that's I'm definitely not telling people to only listen to me by any means, but I think right now I know what I need to do and I know where I want to be and I kind of have a plan. So it's like, yeah, I don't know. I don't really need to try to adopt new ideas and new strategies. And it's just kind of, I think it comes to a point where you gotta like make it as simple as possible for yourself. And that's what I love about the market, not to keep tooting it, but the MFT community is like, we have a big variety of traders and we have a lot of information. We have a lot of people and everyone's very helpful and everybody wants to like share ideas. People are posting different indicators and charts. And it's like, everybody can kind of share, but at the end of the day, it's like it comes down to, your own kind of personal journey.
Yeah. Yeah. What other questions we have from YouTube? Let's see.
How much have you guys spent back testing? And do you have a process? I think Taylor is the king of back testing. To be honest, I'm a terrible back tester. Like I really just don't do back testing. I know that sounds funny, but I'm just, I don't know. The problem is like I can sit here all day long and like back test my strategy, right? And keep going back. I'm like, okay, look, it pulled back to the 14 EMA, it pulled back to the VWAP, it bounced. But again, it's like, if it happens in real life, am I going to pull the trigger? Yeah. Right? When that setup happens. And I don't know if it's because I don't back test enough or vice versa, but that also when I was in school, like I never studied. Like I hated studying. I was like, give me the test. I don't need to study. And they're like, you need to study for this. I'm like, I don't care what's on it. Give it to me, And I don't know. I just feel like for me, I'm forward testing. I have my strategy. I think the best part about it is like the strategy is so simple that it's just like we draw a line. It's like if it breaks out, it breaks out. It's like there's probably more things I could add to it, more confluences, but I don't know. I'm just like, fuck it. I'm just gonna ride into town with my guns blazing and start shooting, baby.
I think also like everyone should recognize you've been trading for a considerable amount of time, right?
7 years. So 7 years now.
Yeah. A lot of your mechanics have been, kind of developed over time from the live trading that you've done. Right. So for new traders or for traders developing or for traders moving into a new system, for me, I love back testing and it helps to continue to build my confidence in my edge. So I like to stay on top of my metrics. So I'm constantly going back. I have very mechanical oriented systems. So, kind of the two approaches that I trade are very mechanical. And so I'm constantly looking at like, is there a way that I can improve this system even better? Can I make this even better? Can I create tools that make it better? Right. So for me, that's kind of part of the joy. I do, and everyone in my program knows, like, they're expected to back test. It is work. This is, for me, back testing is part of the work that a developing trader needs to do to become a successful trader. You can take 20 years or 15 years or 10 years and do it forward testing and, just trading, or you can accelerate that through a really good back testing approach. And I do have a whole process and approach. There's different ways to back test and different ways that you might want to use one platform over another, but that's a whole other deep discussion.
Somebody asked, how do you confirm a breakout? Well, somebody responded with, when it goes in the direction you think it's breaking out to. I think, I made a really good video the other day talking about we use the breakout strategy a lot, kind of drawing our line, getting a breakout strategy. And one thing that I did some back testing. I did do some back testing here. And I found that, most false breakouts, the reason that we're doing a false breakout is we're just a little too overextended on that smaller time frame. It's like there's some, we might get that little quick breakout and we pull back. We kind of either bounce off a previous little bit of, resistance. I'm kind of looking at where the candles were closing at before, if we turn a new support, and then we get that actual confirmation. So there's I think there's definitely a process of being able to look at a breakout setup and be like, it's too overextended, right? I really want something to kind of consolidate more at a level to really kind of give me a better base. If we get 3 candles in a row that are going straight up and we're like, oh, it's breaking out. I'm like, well, no, it's not breaking out. It's just going straight out. Let me get a nice little flag. There's a bull flag. It makes sense, right? We're kind of pulling back. We're kind of just slowly pulling back. We're slowly pulling back. And then we finally break out. That's, I think, the best way to really avoid those fake outs, because, you don't want to FOMO into every breakout. You really want to make sure that we're breaking out. And that comes with just being able to reprice action.
So I want to just ask another question that kind of digs into this a little bit deeper. So it sounds like what you're saying is that you look for clues that there is momentum building. And one of those clues that you need to see is kind of a flaggy pullback. Right.
Correct. The more touches, the more touches of kind of that, that breakout kind of line that we draw or whatever it is, the better. Because then we want to see it getting tight. There's times on live stream where I'm like, this thing is so tight right now. It's gonna go. Yeah. It's gonna break. You can just tell the market's getting this the candlesticks are just barely just do, and you're oh my, you can just feel the pent up energy, right? Because you just know that this thing is gonna go. And that's when you're all right, here it's gonna happen, boys, because that's where you want to be getting in for those breakouts. The problem is if the market just all of a sudden goes and just starts breaking out, and you're oh, what do I do? And you chase it, and then all of a sudden it's whip, it just pulls right back, and that's those are liquidity grabs, those are traps, right? And I think earlier we were talking about that this morning when I got kind of trapped on a trade, and it was if there is no trap, and it can be on the 1 minute time frame, whatever it is, if there isn't a trap, you're probably getting trapped on a breakout, right? If the market is just it just goes straight up, and you're oh, look, it's breaking out, and then all of a sudden it crashes back down, you're you just got trapped.
Yeah,
that was the trap. Thank you for that, because that's the game that they're playing, right? That is the game. The market makers are doing that. The big players are doing that stuff. They're letting those little areas of resistance or support kind of get broken to sucker in retail, and then all of a sudden they reverse it the exact opposite direction, because they got to create liquidity. They've got to just get the market moving. We get in these little levels where we're consolidating, and all of a sudden it's whip, we break to the upside and then right back down. We're oh my God, that was the trap.
Yeah. I think that's a great tip.
I love asking that question. It's if you ask yourself is this the trap? You're probably if you can't identify the trap, then you're probably in the trap.
Yeah. Yeah. And that's a great tip. I think everybody needs to write that down. That is a beautiful tip, because that happens all the time, every day, on all time frames.
Well, and the best part too is guess what? If you can identify, if you can be sitting there patiently and be oh wait, look, it's trapping. All of a sudden it breaks the support level, but then you see the candle just come right back up into that support. You're hey, now I'm long. Now I just got a way better entry, because guess what? They just got trapped, and now it's gonna pop back up. Now my entry is protected.
Yeah.
Because if I can see that it traps before I get in, then I'm like, hey, we're chilling. We're doing great,
Yeah.
because some idiot just got trapped and I didn't.
I love it. That's a good one. All right. That's a good thing to look at.
How do you stop yourself from over trading? How do you do that, Taylor? You're so processed. That's the problem with you.
Dude,
You're just
I mean,
like
I
a
don't
robot over there.
listen. So like, okay. So I've been coaching for about, I don't know, for a few years now. I've coached a lot of traders. And there really are two types of traders. There's over traders and under traders. And you can actually jump from one to another at any time. But generally speaking, some people are a little bit more inclined to under trade. Some people are a little bit more inclined to over trade. I have always tended to be the under trader. Most of the mental and process work that I've done is like press the button. My wife wanted to buy me. Remember Staples? Remember that Staples commercial where it's like the easy button? She wanted to buy that for me and stick it on my desk. It's just press the button, Taylor, right? So I spent, years kind of struggling with this, this kind of holdup of not being able to press the button.
I'm asking you coach questions. Was it like a fear? Did you have an emotion about losing? Is that why you under traded, you think?
That's look at you, man. That's a great question.
Well, I'm just interested because it's either two things. It's either you just didn't have enough back testing data or you just had like a fear, right?
Yeah. Yeah. Fear of loss. Yeah. Fear of loss. And I think, like one of the things that with under traders, going to sim doesn't necessarily help with that either, because like, it's not even necessarily the monetary loss. It's the losing and what you make that mean for yourself. Right.
It's almost like you feel like you're defeated. Like you have this whole strategy and you're like, it's amazing strategy, but then you lose and you're like,
I can't do it. I feel like
ruined.
a failure. And then so then you're sitting in front of a trade opportunity. And if it's more discretionary, then you're figuring out all the ways that you shouldn't be trading that. Like, it's like you might have 10 signals in your favor to take that trade. And then there's two things and you're like, yeah, but it's not quite right. Let me just wait for the perfect setup because I don't want to lose. Right. And so that fear of loss, and then for me, making it feel like I was a failure. Right.
Well,
so
I think Brian just actually asked a great question too about like pride and like accepting that you made a bad decision. But here's the thing, right? No matter what, if you get into a good trade and you get stopped out, it's not a bad decision. Like, you didn't make a bad trade. If you followed your process, you followed your edge, and you get stopped out, and you protected yourself, and you get stopped out, that's not a bad trade. That is just trading. Unless you have a 100% win rate, you're gonna lose trades. Yeah. Like, so how do you communicate that to like a new trader that you're working with? Like,
well, first of all, it's great that you clarified that, because we want to make sure we understand what under trading and over trading are. So let's talk about over trading now, because that was the question. Over trading is when you take more trades than what your process tells you to take, right? I mean, generally speaking, we could say that you over traded today because you took a process trade that you shouldn't have taken. That was an over trade kind of experience, right? So what was fueling that? That was, this desire to like, hey, I want to profit.
Quick P&L profit
to me. P&L is more important to me than trading my process. So in the case of over trading, that's a lot of times what's driving it. It's like, it's either profit or, again, fear, and that's fear of missing out on profit. So fear actually is related to both of them, but it's a different kind of fear. It's a fear over two different things. So with over traders, most of the time you're kind of focused a little bit too much on profit and trying to validate yourself by winning trades or by profiting from trades. And so that's driving you to maybe jump in a little bit early because that might give you a little bit of extra profit, right? Than waiting for your process. So generally speaking, fear is the driver of all of it. It's just different kinds of fear that's motivating under versus over traders.
And then, and again, it's like being able to be like, hey, like, I took a good trade. I got stopped out. Like, I didn't do anything wrong. That's just like, no matter what, like if my batting average is 70%, my win-loss ratio is 70%, like I'm going to lose 30% of the trades. Doesn't mean that I made a bad choice. It just means that that's the strategy. Like, it's how it works. Nothing wrong with that.
My worst days, Patrick, like when I walk away and I'm like, oh, I had the worst day. It's usually a process violation day. Usually it's like, I had a worse day because I didn't follow my process today. And, fortunately, and this is kind of, where consistency comes into play, those are becoming less and less, frequent for me. They're becoming more rare. So, it does happen. And so that's when I'm really, really disappointed in myself and my trading. Yeah, I want all the outcomes. I don't always get the outcomes that I want, but as long as I'm trading my process and I'm trading my process consistently, I'm reasonably happy. Not every trader is like that. And that's part of the coaching work, that we do in the program, is getting you to a place where, hey, I just care about following my process. That's the most important thing here.
It's funny too, because it's the trades that I take with no process, or I just FOMO into a trade, emotional trades, whatever you want to call them. Like, those are always my biggest losers.
Yeah.
Because it's like, you get in, you're like, I'll take a quick scalp. And then all of a sudden it reverses 20 points and you're like, well, it's going to bounce back. Like, I'm not going to get out yet. And then all of a sudden you're hitting max loss and you're like, what just happened? I just wanted to make 500. Now I lost 3,000. What just, and like, it just, that's what's so funny, because again, it's like, if I get into a good trade, I set my stop loss and it stops me out, I'm like, yeah, like that trade was invalidated, right? Like, I got into the pullback, it didn't work out, I took my loss, and I walked.
Everything I was supposed to do. Yeah.
Yeah. But it's always the emotional FOMO trades that end up being the biggest losers, because you get into it and you have no stop loss idea, you have no acceptance that you're going to be possibly wrong.
Yeah. I think the most dangerous non-process trades are the trades that actually win. It's the trades where you didn't follow your process and that actually won. And I'll have traders that come in to, our coaching call and be like, I had a great day today, but like I didn't follow my process, but man, I really had a killer day. And it's like, you didn't have a great day. You did not have a great day. Because that's going to burn you down the road. Sorry.
That is the big issue as well, though, right? Because now, I've had plenty of days where I have, I took really gambly, crazy trades. I made money, and now I think I'm a genius.
Yeah.
And then the next day, I try to do the same thing, and it don't work.
Yeah.
So somebody asked, how does technical aspect of order flow work regarding the prioritization of short orders over long orders in the terms of rank or order? Wow. I don't really look at order flow, to be honest.
Well, you look at Bookmap, right?
I haven't really been using Bookmap a ton lately, to be honest. Not that I'm against it. I've been trying to just take away a lot of variables, because I'm trying to figure out like what really is adding value and what isn't. Like, I don't know if people have seen me lately. I've been really just like kind of taking away stuff and seeing like, oh, am I not making money? Am I having issues trading? And then it's like, if I take something away and it's not really affecting my trading, then it probably wasn't really adding to my trading. Yeah. Is the way I'm looking at it right now.
I love that.
Because also, like, the problem with Bookmap sometimes is like, like I'll see a level or whatever, and I get so honed in on a level, and I'm like, it's got to hit. Like, that level's sitting there. Like, it's got to hit, and like, it might hit, but like, it don't mean that the market's going to go right to that level. I might be long looking for a breakout like through 800. I see there's like 100 contracts at 850. I'm like, well, it's got to go to 850 like right now. And all of a sudden it's like going back down. I'm like, well, I'm not going to sell because 850 is still sitting there. And it's like, well, not how it works, Patrick.
Yeah. Yeah. I've seen that too. Let's see. How to fix a horrible risk reward rate.
Yeah, that's a good one. How do you do that, Taylor?
Back test. All right, so let's just talk about the back testing approaches. So one of the back testing approaches, probably the best term for it, is called chart reengineering. Okay, and basically what you want to do is you want to look at very quickly, the rules that you have, scan through the charts and look for ways that you can improve the rules, and then test those out quickly. So we use chart reengineering pretty heavily in the program to go back and validate. So like, Patrick, we'll take your rules as an example, and all the guys will go back and they'll do a chart reengineering exercise, just to make sure that they can identify that the rules are working. And then they'll do a replay exercise to practice and make sure that they can trade it. So there's the validation part of your edge that probably is missing some oomph right? So if you have a horrible risk reward or win rate, and that whole combination, you have a problem with your edge that you have to fix. And that's you either need to go buy someone's edge and then practice that and kind of make it work someone where that the edge works, or you need to create it yourself. Because whatever edge you have, if you don't have a positive profit factor that's over 1.0, actually, it needs to be greater than 2.0, then you're probably not going to ever be successful. No amount of mindset work or process work is going to fix an edge problem.
I think too is like the best thing to do for a risk reward is sizing down, right? Trade one micro contract and really like test it out. Be like, okay, I'm going to enter here. I think it's going to be a breakout. I'm looking for a minimum of 10 points. And like test it out and like do that. You can back test it. Like go back and back test every time we get a breakout. Like what's the normal range of a breakout? I've kind of in the past when I did my very brief, back testing, I basically figured out like, look, like 10 points is a pretty like regular kind of range for a breakout. If we're getting a good breakout, there's momentum. Like 10 points is pretty.
NES?
NASDAQ. I'd say the ES is like a 4 or 5 point, maybe,
Yeah.
But like for the NASDAQ, like you're thinking 10 points is a very like reasonable kind of target for a trade. So you're like, okay, I need to risk 5 to make 10. And the great thing is like, if it's going to go 10, it normally gives you 15, 20, maybe 30. So yeah, that's the best thing. Go back, start out with one micro contract. It sounds funny, but like just being able to trade one micro contract and still have that, emotional attachment to being wrong or right with the money. It's different than trading, just straight up simulator.
Yeah. Todd I'm going to answer Todd's question because it's super quick. It's back to the overtrading. Is it overtrading? The trade is in process. Nope. Overtrading is when you're trading outside your process. When you take trades that are not part of your process, you are overtrading. Now you could have a process that isn't optimized because you're taking too many trades, right? So that's a different problem. That's a problem you want to fix on the process side of things. So, there's a lot of guys that will trade from 9:30 in the morning Eastern time all the way to 4:00 Eastern time. Maybe you don't need to do that. Maybe you're taking too many trades during the day.
Don't do that.
Right. So, like look and see what the optimal timeframes are or amount of trades where you're kind of getting the most wins, right? If you look at your data will probably tell you, hey, honestly, I really only need to take no more than 6 trades in a day, right? So look at that from a process perspective, right? Your process might be a little bit unoptimized.
I agree. No, trying to trade all day thing it's a recipe for disaster.
I'm just looking for any other questions.
What's the optimal time you think? After 10? It's hard to say exactly. It really comes down to the day. It comes down to the setup. The one thing that I want to make very clear is just because the market opens at 9:30, it doesn't mean that there's not a setup that is formed before the market open, right? We have days where we're maybe we're holding, the low from the overnight and we're setting up for a breakout on the overnight move. Like we can draw a line. Like I love those setups because all of a sudden it's like the market opens and that breakout happens. Like we get that, maybe we're getting maybe the market's pulled back, for an hour into open. And all of a sudden you're seeing that there's a perfect kind of bounce opportunity. Yeah. I really think it's important to kind of look at what happened pre-market. If there's a very solid setup pre-market, there's a good chance once the volume comes in, once the market opens, that we're going to get, a directional move. So it really just comes down to the setups. I think a rule too is if we get a really big range in the overnight, we're getting 100 points up and down overnight because some type of thing's going on, there's probably a good chance that we're going to get choppy move at open. I really want to see those tight ranges overnight for the big moves to happen at open.
Yeah. Good advice. How did you guys meet?
How did we meet?
I think Marketflow Trader community. I think I just
you were actually. Hey. I think you joined the community.
Yeah.
And then we kind of. I was like, hey, You seem like you're pretty smart. Do you want to come work with us?
I think it was me. Like, I think what happened was so I was already coaching, and some people were asking questions about mindset, and I think I asked you. I'm like, hey, are you okay if I answer this? Like, I'm not trying to I'm not trying to squeeze my way into the community. And you're like,
Yeah.
hey, just squeeze on in. So it was awesome. Yeah. And then we just developed a good friendship since. So
Somebody asked, how many bars do you want to use in your line drawing, i.e. pullback? It really comes down to the price action at the time, the strength of the market. I'd like to see at least 3 or 4 kind of, I think the more, the better. Nothing wrong with getting more consolidation. The more consolidation at a level, the better. Like, the better to expect the move to break out, right? Like, if we're consolidating nicely at a level, that's when I'm excited, because I'm like, oh, this is going to be a good move because we've got a lot of consolidation. The market's really putting in a good base, especially like, let's say we break out over, a certain level, and then we turn a pivot point. We turn a pivot point into support, and now we're consolidating at that pivot point. Then I'm like, oh, that's great. So the more consolidation, the better, for sure. Yeah. But I think you want a minimum of like at least 3 or 4 kind of pullback candles, and nothing wrong with getting more.
And that's on your 3-minute chart setup.
That would be like a 2-minute to 3-minute chart, maybe 1-minute chart. It really, I would say it just really depends on what you're looking at. But like, the 3-minute chart, I would say you're probably getting at least 3. You want to get like 3 candles.
And if the market's trending really hard, that's where you might go to a 1-minute chart. And then
exactly. And just the more strength, the more momentum. This really depends. I think I'm always constantly kind of changing my time frames. I think in a slower market, I probably trade actually a bigger time frame. And then in a really fast market, if we're really just trending higher, we're squeezing, then I'm going to a 1-minute chart, because now I'm like looking for more micro pullbacks. I'm not going to expect a bigger pullback, where like if the market's not really making a big move, then I'm like, okay, let me look at the 3-minute chart. The 3-minute chart is going to be cleaner. It's going to give me a better idea of what's going on. Where if we're just trending straight up, it's like I need to get to a smaller time frame.
Yeah. Tasha wants to know, how do you know when to scale up?
I mean, now I looked at a video just recently, earlier. I posted a video of me trading 3 contracts. This time last year, I was trading 3 contracts on the NASDAQ, and today I'm trading a minimum of 5 contracts. I think it really just comes down to, once you figure out your edge, right? Once you figure out that you can make money from a strategy, then it's just simply basically figuring out like, okay, how much can I size up based on my risk to reward? If I get into a trade and I'm risking 10 points, well, I probably can't trade with 15 contracts. I might need to size down. So I think it's kind of like, right now I've actually sized down, to be honest. I've sized down to 5 contracts because I'm trying to kind of just work through some things and not always try to swing for the fences. The worst thing that I've had recently is like, I get into a trade, 15 contracts, it pulls back, stops me out, and then it goes in the direction that I wanted it to. And I'm like, so it's just kind of really I'm trying to fine tune my entries right now, and it's getting better. Like, it's funny because I sized down, and I think sizing down has actually made it just easier to focus more on like the edge over just, trying to just jump in big contracts.
I think if you're even asking the question, you're probably a consistently successful trader, right? Like, if you're not even there yet, you probably shouldn't even be asking the question on scaling yet, right? But I think there's a combination of account size. There's a combination of setting a goal for, kind of what you need to hit in order to kind of go to the next scale. Patrick mentioned earlier, I'm very I'm process minded. And so for me, I'd probably sit down and I have a spreadsheet. I'm like, okay, if I have a $50,000 account, I want to hit 3K, and I'm going to do that with this amount of risk. And then once I hit 3K, I'm going to go to this. And I would have a spreadsheet. I have it all planned out. So there's no harm in doing that and sitting down and kind of thinking ahead of where you want to be and what you want to do and how you want to scale up. But
here's the thing too. I would say don't just size down for one day, right? Like, just like you gotta give it some time, like, because it's hard. Because like right now I sized down. Yesterday I made 6,000. Today I made 3,300, and I'm all like, oh, I'm back in the green. Let me get right back to 15 contracts, because I'm thinking to myself, well, If I would have been trading 15, I would have been up, $15,000. So it's like, relax, Patrick. You got to like kind of tell your, like, it's great because I called Top Step and I was like, hey, put 5 contracts limit and don't let me change it until next year. I told him, I was like, if I call you at any point and try to change it, don't let me do it. Like, we're doing this until next year.
Yeah.
Because when the market, like, it's going to come a point where the market's going to get back to good action, beginning of next year, whatever it is. We get through the holidays. And then it's like, all right, now it's time. We put in the work, we size down. Now we can reward ourselves with bigger profits. I think that's like the hardest part too, is like being okay with like, hey, I had a $3,000 a day. Nothing wrong with that. Like I should be totally happy with that.
That's a great day.
Thinking that I could have had a $15,000 day.
If you followed your process, it's a great day.
Amen. Well, I think there's still a lot more questions, but the great part about this is we do have the community right now. It's $150 to sign up a month. We got a deal going on as well. It's one out. I think it's if 5 people sign up, one of them gets a free month to celebrate the 1-year anniversary. So there's a link there in the chat. I'll be live tomorrow morning. Taylor's in the community all the time. You can check him out, learn about his whole entire thing that he's got going on. We got a really good community of people, and we're excited for the future. It's the first year. We got a lot more to come, and we're growing. I think there's like 1,600 to 1,700 members now, and it's just been a lot of fun kind of seeing people getting funded, people finding success, and and it's cool. It's like I've done some interviews with some of the members too, and everyone's always very, very highly praising, of you and Sage. They're all like, Taylor.
We can't forget about Sage. Sage is in there every day. There's another trade room where Sage is calling out live trades and more working people through kind of recognizing the trades as they're happening.
Yeah,
which is awesome. So there's awesome stuff going on there,
and it's great because you got the whole community. You got a community of people that are in the chat and they're all kind of bouncing ideas around, and it's cool because everyone's kind of like sharing their wins, sharing their losses, sharing the battle that they're going through. But it's cool to. I've seen a lot of people that we had Bonnie, actually one of our female traders. They do exist. I know it's funny. People think that. But women are actually really good traders, to be honest. I think they have less of an ego. But Bonnie, one of our members, she actually got put into the Top Step Live funded account. So not only did she pass the combine, not only did she make money in the Express funded, but she actually got called up to a live funded account. And, she did that. It's like, I feel like that's very, third party validation, right? That what we're doing, it works. There is a process. It's not going to be easy. It's not simple. It's not just going to get rich overnight, but to see Bonnie like go through the combine, to go into the Express funded, and then get called up to the live funded account, I think she's doing something right.
Yeah, 100%. And it's fun to see people have success, right? So just from the very beginning, what we talked about, the reason we're here is we love seeing traders have success. So it's awesome.
Yeah, and Elijah just talked about the indicators. We got a few guys in the community that are sharing indicators, building indicators. I mean, every day there's something going on in there. So if you want to come check it out, Marketflow Trader community, there's a link somewhere there in the chat. I'll link it again. But it's there. It's happening. And we are excited for the future here. And we'll do this more often, but right now, just I've been on the computer all day, so I want to go and get some food and get out of here. I feel like sometimes I'm sitting here staring at the charts, and I'm like, is it still moving? The market's still moving. I'm like, is it moving? I think it's moving. What's happening?
I love it. Patrick, thanks so much, man. Thanks for the time.
Yeah, awesome time as always. Taylor, thank you. Thanks to everyone for tuning in. This video will be live on the tube for a while, and I'll see you guys tomorrow morning. Fresh Cash Friday tomorrow, baby. Let's do it.